What's up, guys? It's your Money Cat. Tesla ended the week on a great note, but still, overall, it is heavily in a downward trend. So, is the crash over for Tesla? Is it finally safe to buy into Tesla again? Let's find out. So, today was a crazy day for Tesla and overall market, really, but we will talk about Tesla specifically. So, Tesla during the day at one point, it was down nearly 13%. And it got real scary today for Tesla because it touched this trend line right here, this diagonal trend line. And this is the single most important trend line for Tesla right now. And the reason is because this trend line has been valid since March 2020. So it has been going on for a very, very long time. And this is what is outlining, what is supporting the overall bullish run that Tesla is having. So if we broke down below this line, then that would mean that this trend line is negated and we are no longer in a bullish trend for Tesla. And I mean this as a long term on a 1 year chart. So at least for now, at least this week, Tesla did protect this trend line, bounced off in a major way, and now we've gone all the way up to $596.25. For me, this is going to be the strongest support for Tesla because of a couple of reasons. Number one, like I said, this is the line that has outlined the bullish trend that Tesla has been enjoying over the last year. Secondly, this point coincided with two other possible supports, creating a increased strength of this support level. The other two are this horizontal support level here, as well as this green line, which represents 180-day moving average that is coming up right below where today's low was around 530 or so. Also, looking at the indicators, the RSI is finally showing Tesla as oversold at 29.57. We haven't seen RSI reached this point since the March 2020 low. Same thing on the MACD. We are actually a lot farther below compared to where we were on March 2020. And although the MACD is still showing increasing downward momentum, I think at this point we are getting close to a decreasing momentum and soon to be a MACD crossover into another bullish run, as long as we can protect this upward trend line that we were able to protect today. If we're comparing this crash to September one, then in September, from high to low, Tesla was down about nearly 40%. And similarly, today, we did briefly touch on minus 40% from the high at 900 to around 540 or so, and that was minus 40%. So according to the percentages, this is now pretty much the same as September when Tesla started turning around again, or at least consolidating and then eventually taking off in another massive bullish run. After going down nearly 40%, one day of good positive momentum isn't going to signify a change in overall momentum or trend. But because of the reasons I've given, I am cautiously optimistic that this could be the bottom for Tesla and heading into either a reversal into another bullish run or at the least into some sort of consolidation before heading upwards on another bullish run. So what do we need to look out for that signifies a reversal in trend? There are two downward trends that we need to break first. The first one is the local one marked by right here. And if we have a positive day on Monday, then we are going to be breaking this trend line. So that would be our first sigh of relief. However, like I said, this is a very short term, probably over just a week or so. So although that is a positive step, that is not the overall trend reversal that we're looking for. The overall trend reversal will be this red line right here, starting at almost the all-time high and has been continuously rejecting the price. You can see that it rejected price here, here, and here as well. And this is the trend, downward trend, that we definitely want to break above, because that will invalidate this downward trend line, and that would mean at the least Tesla is going back into consolidation or even on a upward movement. Of course, a lot of this will depend on the overall market and the interest rate, as that is the controlling narrative right now. It doesn't really matter what each company is doing, whether they have good news or bad news. It seems like everything is kind of riding on what the 10-year Treasury interest rate is doing and how the overall market is reacting to that. And I think the reaction to the 10-year Treasury rate rising has been overblown, and people are overreacting a little bit. We are currently minus 40%, or we touched on minus 40% off of all-time high for Tesla. Similar to back in September, I think minus 40%, we are reaching just about the peak of that overcorrection. So again, I'm not saying that this is the point where the trend reversed, but I'm cautiously optimistic. I'm very happy that it protected the upward trend line around 540 or so today. And so it closed in a really, really positive manner. So hopefully if the interest rate doesn't jump up high, then I think there is a good chance and hope that this could be a point where Tesla starts to consolidate a little bit and looking out for a possible run to the bullish side again.